What if I told you there's a way to invest in the stock market without falling for those flashy get-rich-quick schemes? Just solid, smart strategies. Sounds great, right? Let's get started. First, let's cover the basics. A stock is a small piece of a company. When you buy one, you become a part owner. The goal is simple. Buy stocks in companies that grow in value so your investment grows too. Now, there are two big players in the world of stock analysis: technical analysis and fundamental analysis. Technical analysis is where the stock nerds, traders, turn into chart detectives. They're out here analyzing patterns and squiggly lines. It's fast, it's intense, and honestly, if you're into short-term trading or day-to-day action, this is your jam. Think of it as speed dating for stocks. You're swiping right on trends and hoping for the best. But if you're more of a long-term planner, the buy, hold, and chill type, then fundamental analysis is where you want to set up camp. Instead of just looking at price movements, you're diving deep into a company's soul, its financial reports, the brains behind the operation. That's the leadership team and its overall brand mojo. Basically, you're figuring out if this company is built to last or just a one-hit wonder. Here's a pro tip. Diversify your investments. Think of it this way. Putting all your money into one stock is like carrying water in a single bucket. Sure, it works until it springs a leak, and suddenly you're left high and dry. But an index fund? Imagine it filled with hundreds of tiny cups, each representing a company. If one cup tips over, no big deal, you've still got plenty more holding you up. It's like the safety net of investing, spreading out the risk so you can sleep a little better at night. When it comes to picking individual stocks, it's time to put on your detective hat and start with the numbers. The first stop? The balance sheet. It's like the company's financial selfie, but no filters allowed. Here's the golden rule. A healthy company should have more assets than liabilities. Simple, right? Now, here's a quick hack. Take the total current assets and divide them by the total current liabilities. If the number is above 1, you're in good territory. So, if the numbers check out, you're off to a solid start. Next up, the income statement. An income statement is a financial document that summarizes a company's revenues, expenses, and profits, or losses, over a specific period such as a month, quarter, or year. Don't forget to consider a company's leadership. A strong leader like Elon Musk can skyrocket a company's growth, but their actions also make stocks volatile. News and social media buzz play a huge role too. Investing doesn't have to be overwhelming. Diversify, analyze, and stay patient. Subscribe for more investing tips, and I'll see you in the next video.